FSN Radio.
It's all about what's next.
Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports.
The Financial Survival Network.
It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 7/22/20. Well, a lot in the news about Tesla, a lot about EVs, and the inexorable move from internal combustion engines, powered cars, to EVs, electric vehicles. And what does that mean? What does that mean to the supply chain? What does it mean to those markets, particularly lithium, but copper too, because one EV uses as much copper as a house. And well, we've got Chris Berry on with us. Chris, you're president of House Mountain Partners, and you've been in this for going back to 2009, before anyone else was in it, and based in New York City. So we want to get your opinion. We'd also like to get your opinion out there too. Where do you see the whole electric vehicle thing going? Will everybody be driving a Tesla or a Tesla-derived vehicle? And where do we go from here? So, Chris, it's great to have you on the show. And like I say, you've been in this so long, you advisory work, you work with asset managers, banks, corporations, academia, and obviously this trend isn't going away. We just saw Audi release a couple of new cars that look actually pretty cool. I don't know that they're really up to a Tesla in terms of technology, in terms of the AI and self-driving autopilot capabilities we seem to be on the cusp. But anyways, there's a rumor. I just caught it on YouTube. I didn't get a chance to actually watch the video, but you know the rumor, we talked about it before, the concept of Tesla buying Piedmont Lithium, which is a North Carolina-based lithium project. It had produced lithium in the past. Right now it's not producing. But you know, the idea of vehicle manufacturers actually buying lithium mines, is that going to happen?
Well, I guess my short answer is no, and I can explain why. And thanks very much, Kerry, for having me on. I just think that, you know, look, there is, I think if we've learned anything over the last few years, is that the demand for lithium, the demand for cobalt in particular is going to increase quite rapidly, despite what we've seen in 2020 with, you know, sort of the global economic shutdown stemming from COVID. But, you know, one thing is clear, even at sort of I'll just say a 10 to 12% electric vehicle penetration rate. And so that would mean, you know, 10% of new sales in a given year, say 2025, 2026, if those are EVs, and not just full EVs, but hybrids, plugins, you know, you're looking at a situation where lithium demand will potentially at least triple from where it is today. Today, we're at around 300,000 tons of demand for what's called lithium carbonate equivalent. 40 to 50% of that goes into the battery business. And so, you know, the lithium industry, I think, just sort of generally has a view, and it's one that I agree with, that, you know, before the end of this decade, perhaps, again, as I mentioned, 2026, 2027, there will be about 1 million tons of lithium demand per year. And again, that is based on EV uptake and EV demand, even at just a 10 to 12% penetration rate. So, you know, the question becomes, if you're an OEM, whether or not it's Tesla or VW or Daimler or General Motors, you know, any of them, and you see this mega trend or this shift unfolding before our very eyes, you know, how do you retool your supply chains, number one? And then number two, and more specifically to your question, where is all of this lithium going to come from? I'm of the view, again, to get back to your question specifically, that any OEM, whether or not, again, you know, Tesla is in the news, as you had mentioned, they're always in the news, but any OEM going out and just buying a mine is a very dangerous thing to do. I think it's a very dangerous idea, because building cars and mining and refining lithium to a high degree of purity are completely different businesses, completely different ball games. I think it makes a lot more sense for the existing business model to remain in place, which is you have a company like Tesla or any OEM, and what they will do is sign multi-year offtake agreements with companies like Albemarle or SQM, some of the main lithium miners. So I actually see the existing business model staying in place. That doesn't mean that you won't have, you have a number of EV manufacturers in China as well, which is and is going to remain the largest EV market in the world for some time to come. Could you see one of these Chinese OEMs buy a mine outright? Sure, because they have a different sort of view, I think, on the EV shift and how quickly it's going to happen, and also wanting to own the supply chain. But I think that, again, it's a pretty dangerous undertaking for, I think, any of these OEMs to go forward with.
Yeah. Well, yeah, it's a whole mining, there's so many aspects. Mining in and of itself, very complex business. It's really hard. You have times where you make boatloads of money, and then you have times where you lose boatloads of money on it. Obviously, there really isn't a lithium market, public market in the futures, right? You can't really buy lithium futures. Maybe that's what we need to see more than anything else, is to get a mature, developed financial market for lithium.
Yeah, I think that's a big part of it. The London Metal Exchange, to their credit, has really tried to put a contract together, a lithium chemicals contract together, similar for cobalt as well. But, I think the challenge there, to your point, Kerry, on pricing, is that the lack of pricing or the lack of transparency on pricing is a competitive advantage for these lithium producers. Albemarle or SQM or Livent, for example, kind of the big three Western players that we're aware of, they have different, views on offtake agreements and different views on pricing, and of course, different products that they all produce. And so for them to just come out and say, okay, here's our pricing, we're going to make it public, that I think is transparency, quite frankly, that they would not want to entertain, for lack of a better phrase. And so, because of that, I think that the best thing to do is have flexibility, built into your offtake agreements, rather than saying, okay, this is a take or pay contract, and, here is the flat price. Because to your point, we've certainly seen this in the lithium market over the last few years. Pricing can spike and it can go parabolic. I mean, for all of the talk about how lithium is a specialty chemical and it deserves to, the companies deserve to trade at a premium, I agree that it is a specialty chemical, but, look, I mean, lithium pricing, cobalt pricing, the dynamics they're not immune to cycles like other commodities like copper, like iron ore. And so, that's always been one of the challenges. So, if I'm an OEM, again, just look at, VW, for example, they should be, and they actually are, I think, going out and doing pretty long-term agreements with some of these end users, like, it's no secret, Volkswagen and Ganfeng Lithium, one of the largest lithium producers in the world out of China, has, they've done a 10-year deal to lock up supply, because, again, I think VW can see this coming and just doesn't want to be caught short and be subject to the pricing fluctuation, or just the general availability, I should say, of these raw materials. And so, we're sitting here talking about lithium, and it is important because it is irreplaceable. But, the same strategy needs to be employed, I think, around cobalt. And you've seen BMW do that recently with a group in Morocco, just as an example. But same thing for copper, for cathodes, for all sorts of different, small and, well, copper's not small, but some of these other small and esoteric metals and minerals. And I'll just say one other thing, we're starting to see the same kind of dynamics heat up from a geopolitical perspective with rare earths. Okay. Rare earths are obviously used in, a lot of different applications, but in particular, certain rare earths are used for magnets, motors and magnets in electric vehicles like Teslas, for example. And China controls at least 80 to perhaps 90% of the overall supply chain because of some of the geopolitical dynamics that we've seen with President Trump and his trade war against China. There's a real, I think, move around, bringing some of these supply chains home. And perhaps that also underpins, I think, what you had mentioned this morning about, Tesla maybe taking a look at some domestic resources on the lithium side. Could be related. It's just, hard to tell.
Yeah, and they don't have to necessarily buy Piedmont or whatever entity outright. Mm-hmm. They could also just finance it and let the professionals run it, take a piece of it. Right. I mean, that's always an option as well. Joint venture.
Yeah. And that model has been tried and true and makes an awful lot of sense. I think if you're trying to figure out, out of the next 3 to 5 years, as an example, okay, lithium prices are at a historic low right now. Sooner or later, this is going to shift because of wider EV adoption. What companies are going to be left standing? I think, one of the biggest issues is one of the biggest ways to sort of figure out, okay, who's going to be left is thinking about this in terms of a partnership model. The lithium business in particular is, yes, it's small. The pricing is opaque, but it's pretty complex, actually, being able to produce battery quality material at scale. And that is the name of the game going forward. Make no mistake. And so you've seen, again, a company like Ganfeng Lithium, I mentioned before, they have done I think 6 or 7 different offtake agreements with a number of different players in Western Australia. And actually here in the U.S., actually in Argentina, but U.S. listed Lithium Americas, Ganfeng they own, I think, 17% of the company on the equity side, Lithium Americas, that is. They own 51% of the project down in Argentina, and they've also loaned Lithium Americas a fair amount of money in the form of debt to get the project built. So, Lithium Americas has great management, great asset, but they brought in that technical talent in Ganfeng to get the project built. And so they're one of the next, I think, lithium producers going out over the next couple of years.
Right. And lithium right now, the way it stands, is pretty much an oligopoly, right?
It absolutely is. And, it's, again, as I mentioned earlier, 300,000 tons today. You've got really, 5 major producers: Albemarle, SQM, Livent, and then Ganfeng and Tianqi kind of round out the big 5. There are other smaller players in terms of production in Western Australia, but that's really it. And so even if we do jump to 1 million tons again at some point over the next 6, 7, or 8 years, it's still going to be an oligopoly. Okay, you're going to see those existing players arguably probably maintain their market share, I would think, in a much bigger market. But there's clearly room at the table for additional producers, whether or not it's the Lithium Americas of the world or some of the other near-term players.
Right. Yeah. So the situation's still evolving. Hey, what about the other metals that go into batteries? You mentioned rare earths. Cobalt is one right now, although supposedly the next iteration of Tesla's battery is going to eliminate the need for cobalt, I heard.
FSN Radio.
It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network.
It's all about what's next.
Yeah. And so, the battery chemistry angle is something that I think your listeners want to spend an awful lot of time understanding and learning about, because it is the one really dynamic piece of this equation that I'm not going to say you can control, but you can certainly learn about it and get educated about it, because I think it's going to be very, very important. A year ago, if we had done this interview, the future, according to the industry, was, okay, we're going to be using a lot more what are called nickel heavy cathodes, like nickel, cobalt, aluminum, or nickel, cobalt, manganese. More nickel, less cobalt for geopolitical reasons that I think we're all aware of, but I can address in a minute. And also energy density. And so you were going to have this cathode chemistry that used lithium hydroxide coupled with high nickel cathodes. And what that argument ignored was the fact that there is an enormous amount of R&D back then and even today going into LFP, or lithium iron phosphate cathode battery technology, to the point where, again, depending upon how you use the battery from a mobility perspective, you really don't lose that much range or energy density in state-of-the-art LFP batteries relative to standard NCM or NCA batteries. That is certainly debatable. I'm sure if there are battery chemists listening to this right now, I can see the hate mail coming in because it is debatable, but nevertheless, my broader point is that LFP is far from dead. You can see what a company like BYD over in China, again, one of the largest OEMs, Chinese OEMs in the world, has done. They have released a new LFP battery, which quite frankly, I think will compete just fine with some of the more energy dense chemistries. And again, that lowers your costs and also lowers your, exposure to cobalt, which is something every OEM in the world that I'm speaking with right now is looking to mitigate and ideally get rid of totally.
Interesting. Well, yeah, the technology is going to drive the industry, obviously. Mm-hmm. What about zinc air batteries? I've heard something about them recently, and sodium batteries.
Sure. Look, they all have their pros and cons. I think, again, one of the challenging things here as an investor is you sort of have to pick your horse and run with it. So if that's the right way to think about this, I think that, vanadium redox flow batteries are another one. They get a lot of press. I think that what we're going to find, or at least my own personal view out over the next 10 to 15 years and maybe even longer, is that for mobility, whether or not it's e-bikes, as we were talking about earlier, or, light duty vehicles, what have you, lithium ion is the clear winner. It allows you to combine lightweight, energy density, and also a 30-plus year track record of safety using different cell formats and chemistries in a number of different environments. No other battery chemistry, to my knowledge, can really boast that trifecta. And so, but that said, there's a great deal of R&D money and testing, I think, going into zinc air, going into vanadium redox, going into some of these others. And some of them might make sense and probably do make sense for megawatt scale or grid scale energy storage applications, pairing it with solar, pairing it with wind, grid levelization, things like that. But I think that those are actually a ways off. And I say that only because if you think about what's happening on the lithium ion side here, you can look at like Benchmark Mineral Intelligence. They're, in my view, one of the market leaders in terms of research for these metals and minerals in the supply chain. They're talking about terawatt hours worth of battery factories being committed to, some built and some committed to, just in the next 9 or 10 years. And so those are all lithium ion. And so the question becomes, well, geez, as battery chemistry continues to improve, and so, your range goes from 300 to 500 to 700 to whatever, 100,000 to 1,000,000 miles, as we're now seeing in the lab, the usefulness of the car will, the battery is going to outlast it. And so what do you do with a battery, a lithium ion battery that has, 60, 70, 80% of its capacity?
Good question.
Left over. And so my view is that I think second life, in other words, pairing some of these used batteries together. And to be fair, there is a cost associated with that. It's not just plug and play. But I think that you're going to see a lot more lithium ion in energy storage, at least over the next few years, until, Kerry, to your point, some of these other technologies around vanadium redox, for example, can catch up, quite frankly, on cost with respect to dollars per kilowatt hour.
Right. Hey, so we're looking now, Tesla's battery, supposedly they got a car coming out. Actually, it's out, the S, get 400 miles on a charge, which isn't realistic because you never totally expend the battery. But just let's assume it's 400. By the end of the year, maybe middle of next year, what do you think we'll be up to?
Well, it's a very timely question because Tesla's battery day is in mid-September. It's either the 15th or the 22nd of September. I don't recall. And so, there are all sorts of rumors floating around out there about a dramatic jump in terms of energy density for their batteries and their battery chemistry and technology. So look, where are we going to be in a year or 18 months? I think a lot will hinge on the gauntlet that Tesla will throw down during their battery day in a couple of months here. I think that, again, you're even within the automotive sector, you're going to find different chemistries for different uses. I mean, obviously, buses will use LFP. To your point earlier, I think you mentioned Tesla and everything they're doing in China. The Model 3s that they're building in their Shanghai factory use LFP chemistry. They do not use NMC or NCA. And I think a lot of that just has to do with how cars are generally driven in China relative to the rest of the world. Energy density isn't sort of the same. It doesn't carry the same weight. It's not as an important a factor. So, a lot of balls in the air, but I think we'll know more in a couple of months to answer your question specifically.
All right. So that one's up in the air, but obviously the range, which is really right now, it's important. I have a feeling in a couple of years, it's not going to matter. Like if I could get $700 miles on my batteries or 600, I can only get 300 on a tank of gas. The theory being, though, that you can fill up a tank in 5 minutes and it takes 30 minutes or so, 25 minutes on a supercharger to recharge the batteries. And so that if you ask most people about electric cars, anyone who knows anything, the first thing they're going to bring up is the range anxiety issue, right?
Mm-hmm. Yeah, and I think look, maybe I'm obviously bullish on the theme and the thesis going forward. I've driven EVs. I've talked to people all up and down the supply chain. I think that the range anxiety is in many ways much ado about nothing. I just think a lot of people haven't been behind the wheel of an EV and really understood, the challenges or the lack of challenges, I think, in terms of managing range anxiety. I think, a bigger issue, and this is something that could arguably be addressed with a lot of the green stimulus that we're hearing about throughout the world, is the charging infrastructure. That's always objection number two. First is, to your point, Kerry, it's like, okay, I don't want to get in a car that I can only drive 400 miles and it takes 12 hours to charge. Well, again, that's really not an issue, in my opinion. The charging infrastructure, I think, is something that is going to be addressed here in North America and in Europe in particular, two very large automotive markets, realistically over the next 3 to 5 years. I mean, I think Tesla has proven that if you have an infrastructure in place, the sales or the interest will be there. And I anticipate that happening. I think the other OEMs are really going to get together over the next 3 to 5 years and push forward on this theme and thesis as well. I just think that, the 12-hour charge is really not an issue going forward.
Yeah, I'm totally inclined to agree with you on that because most people do not. The average person drives their car 40 miles a day, notwithstanding the pandemic. So, and you set up the charger in your garage, that's going to do most of your charging for you. That's the longer trips, which vacations, whatever. And like you say, the infrastructure is there. The Tesla even programs the route so that it optimizes the charge in your battery and optimizes the chargers where you're stopping off at a supercharger and you're not even getting fully charged on your battery because it's calculating how much power you need to get to the next supercharger. Yeah. So really those factors, it's kind of like falling by the wayside. Technology, again, kind of curing it. So I guess when you look forward here 10 years from now, Chris, what percentage of the overall fleet of the US and the world is going to be EVs, pure EVs? Yeah,
I think, 10 years from now in 2030, I think you could easily see 15% EV penetration. And, you know, again, that will raise some eyebrows. I think the bulls out there think that, okay, gosh, you know, that seems awfully low. And you know what, maybe it is. I wouldn't want to go any below the 15% going forward. Yeah. Again, I just think that you have this absolute tsunami of EV supply, if you want to call it that, coming on stream just in the next few years. I mean, I think that, you know, the real tipping point and one thing that I think a lot of people are waiting for in terms of buying a new full EV is cost parity. When is the total cost of ownership for the EV going to beat out my internal combustion engine? Again, it's a little bit of a moving target. The data that I have seen is, you know, it could be as soon as 2023. Depending upon, again, what kind of a mode of transportation we're talking about. But, you know, I think that you're going to see a lot of change in the next 10 years. I mean, if most people are, or even if just 15% of, I guess, the automotive fleet is electrified by 2030. I mean, to your point, you know, you come home, you've got your charger, you know, charging infrastructure in your garage. And, you know, look, I mean, you can feed excess electricity into the grid. There are a number of, I think, business models or ways to maximize the usage of this car that, not that they haven't been thought about yet, but they're just not commercialized. So I think that, you know, you could have a situation where your house or your apartment or whatever, not your apartment, your house is sort of like it's a power plant and you're getting paid for feeding electricity into the grid. So, you know, I think the other, you know, the bigger interesting question is who's going to lead? You know, who is going to win this race? And obviously right now, you know, it looks like China is running away with it. They've got the infrastructure, they've got the longer term view. But I wouldn't count out sort of, I'll just say, Western ingenuity coupled with a lot of the, I talked earlier about the green stimulus. I know a lot of people turn their nose up at that because, you know, it's an awful lot of money being talked about and thrown around. But if it can be, let's just say, allocated and spent appropriately, and again, that's open for discussion and debate, there's no reason why the United States in particular can't lead this whole revolution out over the next 10 years.
Yeah, I agree with you. And I think that Tesla's technology in terms of battery, in terms of the motors that drive the car, in terms of the infrastructure for charging and or autonomous driving or autopilot, I think they're so far ahead of everybody else. We're going to see now, like, what the latest Audi looks like. We'll see what the Ford Mustang SUV EV looks like. But in terms of, I guess, pollution, China's so polluted, and it really was an imperative for them to get working on these EVs. Anyways, I guess that's it for about now. So the best place to find you is discoveryinvesting.com.
Yeah, that's my
partners.
Yeah, it's my website's discoveryinvesting.com. I'll put occasional research pieces out there, and I'm also on Twitter. At cberry1 is my handle. And that's about it. Love to continue the conversation.
Yeah, well, I'm sure we will as things develop. I want to see what's going to be with that rumor of Tesla buying out lithium producers. We'll see about that. And we will definitely catch up with you and find out what's going on. Any questions, comments for Chris, myself? Email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network, our website, financialsurvivalnetwork.com. Sign up for a free newsletter. Chris, been a pleasure. Thanks so much for coming on.
Thank you.
FSN Radio.
It's all about what's next.
Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports.
The Financial Survival Network.
It's all about what's next.